All right, so let's get into it. So before I go any further, I just want you guys to take a look at the disclaimer. Just pause the video, read it, and let's get into it. All right, so just an introduction to my style of analysis. I do not use retail concepts to analyze the markets. I don't use that type of technical analysis to analyze the markets. What I do use is institutional concepts. So, what most traders know is that there are only buyers and sellers within the market. And, they forgot to tell you that there's a third participant and the biggest player, which are the institutions, aka the supplier. They both sell and buy, right? So they control the market and how the markets move. And throughout this breakdown, you will see, how they actually get into the market and, basically buy and sell, how they basically move price from demand to supply and do it all over again 10 times over. So let's get into it. So on the weekly time frame, I can see that the market is in an uptrend. I don't need to go on the monthly. It's very clear to me right now that the weekly is in an uptrend, right? And monthly, however, we mitigated the monthly up here, right? So what the market is doing now is pushing from a point of supply back to a point of demand, right? And we can see where they actually sold before they bought. Not even there. Let's go closer to price right here. This was a reaccumulation of price to bring price higher. So this is another place of demand on the weekly time frame that the market needs to go. So what we can see from this point is probably a bounce to give us a new high, but can't really predict the market. So just have to work with what is given to us, right? So that is what we are seeing on the weekly time frame. So let's pop down on the daily. So on the daily now, however, our target is the weekly demand, right? We want to get to weekly demand down here because demand is where buyers are at. That's the point where they sold before they bought. So the fact that they sold before they bought is that they are in drawdown at the moment. So they need to go there and to break even, or let's use this big word, mitigate, right? They need to mitigate their positions. So saying that now, we understand where the market is structurally. So that's the first thing I look at. I look at the structure of the market. So on the daily, I realize that the daily is in a downtrend. However, and the daily wants to meet with the higher time frame, the weekly point of interest, to decide where it wants to go from then. So go ahead and mark off our daily high and our daily low. That's all. So I want to know the range in which we are trading in. So once we know the structure, once we know the direction from the higher time frame, then we want to know the range in which we are trading in, because what the market does in those ranges is manipulate and gives a reason to go either higher or lower, right? So let's annotate that here. So this is our daily high. Then here is our daily low. All right. So let's jump down now on the 4-hour time frame. This is our daily high right here, daily low. So we know now our range in terms of the daily, and it's the same range for the 4-hour time frame because this is one push on the 4-hour time frame. I don't consider this as a lower high, lower low, lower high, lower low. What high created that low, right? This was the high. This is the high right here, which created this low. And remember, our targets are the weekly demand, right? So how are we going to get there? We need to sell, right? We need to sell. The market needs to push down to get to that point, right? So as we can see on the H4 time frame, there was a desperate attempt to possibly break structure, but this to me is just a manipulation of previous structural points that would have been denoted by other traders. But to me, this is not structure. This is structure, the high that created the low. So I wouldn't consider this as a breaker structure until it reaches above this point, right? So in seeing that, realize that the banks made an attempt to take liquidity from these highs, right? And a key thing to note is that this leg, we got price going beyond the 50% retracement, meaning beyond the 50% retracement, this is where premium price regions are. So from the 50% here of the leg above is premium price regions. And what the banks love to do is to sell from premium price regions and to buy from discounted price regions, right? So realize that price came back into a premium and we got a nice reaction. The market started to sell down. So let's go on the H1 time frame to just get more clarity as to what is happening here. So after we went into a premium price region, we saw that price made its way down. And after seeing that, what did we see? We saw a redistribution of price. So just to give an insight, the way how the banks work, right? They have to formulate what we call schematics in order to fill their orders because the banks are trading millions, billions of dollars, right? And if they drop in, for example, $1 million lot size, that will sink the market, right? That will leave a lot of inefficiency within the market and the market would basically crash. A particular instrument would crash if that occurs. So they have to formulate what we call schematics in order to fill those orders because they cannot drop that $1 million lot size at once. They have to do it over a period of time. So in this point here, at this point here, we realize that they were redistributing price, right? So this is their attempt to move price lower, but just over a period of time because they cannot do it all at once, right? So what we see is that they basically, all right, at this price region, we can see that there is strong support as retail traders may call it, right? And this was just an attempt to induce buyers, right? So buyers buy, right? So when the buyers buy up the market, that basically gives them enough liquidity to sell down the market. So because they can't drop that $1 million lot size, and the next key thing to get into is that for every sell there's a buy. So if there were small amount of participants within the forex market, I would have to come to you. If I want to sell EURAUD, I would have to come to you and say, yo, I want to sell EURAUD, I buy it. But because there's a lot of people within the market, we don't really need to do that. But because the banks have a lot of money and there's not a lot of people having that amount of money to say, hey, basically I want to buy what you are selling, you see me? So what they have to do, they have to generate a lot of buyers in order to sell the market, because for every buy there's a sell. That is just it, you know, from a factual point of view, and that's just economics. So the redistribution now, again, is just an attempt to move price lower and them filling their orders in order to do so. So after I realized that this is what their intentions are, they want to move price lower, then I go ahead to see where are they, like where is the order flow of the market. So after identifying the structure and identifying the range in which I'm trading, then I go ahead to identify the flow of the market. In which direction are the orders flowing, right? So as we can see, this is a redistribution of price. And if I go ahead and make a note of it, let's draw up this redistribution. So at this point, we can see there's a buyer's climax. All right. We have that secondary test. So what the secondary test must do is the secondary test must test supply, right? So these 2 points are secondary tests because they're testing supply. So after we test supply, we realize that we get some sign of weakness down here. Sign of weakness right there, which shows us that, basically telling us that the market wants to go lower. And after which we got an upthrust. And we got that final terminal push to the upside, which grabbed most liquidity. Is that EURAUD, right? So after we get to our EURAUD, right? At this point, they bought up the market, right? And they sold. That's why we see this wick right here. So if we go on the 30-minute to get more detail, bear with me here. All right. So we have that wick. So as you can see, they bought before they sold, right? So as we can see, the fact that they bought before they sold, they must be in drawdown, right? If they bought and have a position open and then they sold, so they're in drawdown on that buy. So what they have to do is to mitigate their position. So when they sold on the market, they came back, mitigated out of this position, mitigated out of the buy, and that continued to happen. We start to see them mitigating out of their buy positions, right? So that is showing me that the order of the market is to the downside. The order flow of the market is to the downside, right? And money is being transferred from this point to this point to this point. So I'm just tracking where money is being transferred, right? So the last point here, money was transferred to this point, and then price came, gave us a minor break, came back to mitigate out of this candle right here. So they bought before they sold, so they came back to mitigate that position. And the orders just to the downside. This is where they're filling their orders, right? To the downside. So the last point where they had their orders was here. All right. And what the market came to do, the market came to mitigate that point. So where now is supply resting? So I just tracked where money is. Supply is resting in this area. So if so in this area, basically what I do no more while is just to go on the higher time frame to get a single candle to know, like, you know, particularly which area I'm looking for price to sell off from. So this is the same point right here, as you can see. And what I do is to go from the open of the candle to the wick high, or if it's a sell candle, I go from the open of the candle to the wick low, right? So because wicks buying is still occurring in the wicks, so that's why I take note of the wicks, right? if we pop down back on the 1 hour time frame, we realize the same thing happening again. As price comes into supply, we have a distribution of price. So this is what we see up here, so with the case of the buying climax, selling secondary test and so on, which shows us distribution is taking place. We are seeing this here again. So at this point, we have that buying climax, right? The buying climax, and after which we tested supply with a secondary test. And then we had that UT. No, not all the times you're gonna get that terminal push up to the upside with the UTAD, you know. We have different types of distribution and redistribution. So this is a case where we didn't get that UTAD, and what we did was to exit the trading range. So the trading range is defined by the buying climax and the automatic reaction, right? So this is the trading range, and we exited the trading range. So from the UT and we exited the trading range, that basically signaled for me a type 2 schematic, right? So as you can see, supply is key. This was the last point of supply, as you can see. And we came into that supply and we redistributed, because as we can see, price made an attempt to push up, and the opposite of distribution is accumulation. So what a redistribution really is a failed accumulation. So as we can see, price was trying to have that order on the smaller time frame to push up, but as soon as we saw this price action, we know that yes, this is not actually an accumulation, but actually a redistribution. So I normally consider this as the ice, and then price would be breaking through that ice. Right. So once you get the break of the ice, I'm just looking for a point of interest from that coin. So after we get the exit of the trading range in terms of the distribution, and we broke below this point, which started the up move. So this was the point where they started to attempt the accumulation from. So once we got below that point, it confirmed for me the redistribution of price, and that's when I just zoomed into a time frame within the UT to pick my point of interest. So if I just cut this back, so I'm just trying to look for where they last bought before they sold down the market. So I went all the way down on the 2-minute time frame. So these are the time frames where the banks are playing. A lot of people don't really look on these time frames, but what I can see, I see this last 2-minute candle before this down move, before the down move occurred, right? So with that in mind, there's imbalance there. So there's insufficient price action right here. So remember, I said that for every buy, there must be a sell, or for every sell, there must be a buy. So we sold and we did not retrace to fill that price point. So price has to come to fill that price points. And basically the banks operate with an algorithm, and the algorithm knows that this price point is insufficient, so they have to come back to that price point to mitigate. So two things are occurring at this point, and I use them as confluence. They have to mitigate their positions, and also they have to fill in insufficient price action. So that denoted here was imbalance. So we either call it insufficient price action or imbalance, right? And we had that 2-minute open. So my entry was from this 2-minute open. And this is very precise. So I just had my entry there, and stops We're just above the candle. All right. And I was just targeting the low that was created. Hold on. Get back. So I was just targeting this low. That was a 1 to 14.5, almost 1 to 15. So that was my target. And of course, after seeing the confirmation of the redistribution when price came down, so all I wanted now was for price to come back to mitigate that point and to push down. So as we can see, price tapped in, filled that imbalance and went. So that's it. And this trade was taken on the 17th of March. And on that day, there was a lot of news. There was this news that came out, the FOMC news, and that basically propelled the trade, you know. So I was 1 to 10 in an hour, right? So this was a beautiful setup. So that's it. If there's anything that you guys don't understand, here's my social media. You can hit me up on IG or add me to Discord and just message me. So peace.